Tuesday, August 8th, 2017, Monaco 64, home of alternative economics and contrarian views. So we're going to have a look at how the markets are doing this morning in London or Europe. And I also want to talk about the debt ceiling again. I've made a video probably about a month ago, and I put it in the card about the debt ceiling. I know a lot of people say, well, you know, there's always like a brinksmanship about the debt ceiling. In the end of the day, things just keep going. That's true, but it doesn't help the US dollar's status as a reserve currency if creditors have to keep worrying about a government shutdown, a technical default, temporary. You know, it might be temporary, but still, you know, do you really want to hold a reserve currency that has all this kind of problem? And I guess it's the paradox. I forgot the guy's name. It was an economist in the 60s. Triffin or something. He's a Belgian economist. It's the paradox of the reserve currency that, you know, they need to have, you know, if it's a fiat currency especially, you need to have an ever-increasing amount of debt to sustain the global monetary system. And that's at the point we are at right now. You know, the dollar has had, you know, it's kind of a double-edged sword. You know, the US has been able to borrow and spend the government as much as it wants because there's demand for the dollar, the paper dollar, but at the same time, it's indebted the country so badly. So you've got this paradox. So I think, you know, we're coming to some kind of crisis. We've had crisis before, you know, the Lehman crisis, the government shutdown crisis, and also the debt ceiling crisis in 2015. There was also in 2011, S&P downgraded the U.S. Treasury from AAA to AA. The price of gold soared to almost $2,000. Yeah, there's an article here on Zero Hedge talking about the debt ceiling, that it looks like now the Treasury has been able to postpone the, you know, still will be able to operate according to the Treasury, you know, through to the end of September. But now you see the U.S. 5-year CDS, according to Zero Hedge, and that's the credit default swap. 5-year maturity. So that's just basically insurance that you can buy, you know, to hedge or protect yourself against a default by the U.S. Government. And the spread between the U.S. Insurance and the German insurance is the highest it's been since the Lehman crisis. We are over 2.2% over German 5-year, while, you know, during the Lehman crisis in 2008, that got up to 2.5%. Government shutdown in 2013, that got to just under 2%. Debt ceiling crisis in 2015 got to just under 2%, and now we've gone above that level. So these are just derivatives that you can bet on and insure yourself against default. And the reason they compare it to Germany is because the German government has a good reputation, you know, in terms of debt. It's the benchmark for European government bonds. I'm not saying that I think it's a good thing, a lot of government debt. I'm just stating a fact. So, yeah, this is going to start to come up, I think, again. And you know, I did a video about this about a month ago, and I'll put it up in the card so you can have a look at it. Gold, you know, basically the debt ceiling has been suspended for almost 2 years now. So even though we have a national debt around 20 trillion government debt, the debt ceiling I think is around just over 18 trillion. So if they're gonna you know, they're going to have to come to an agreement to increase the debt ceiling, and it's going to have to be increased to around 21.5 trillion, because they increase it to 20. we're there right now. So it's going to have to be a big, massive increase in the debt ceiling because they've suspended it for so long. And that could have a negative impact on the dollar. And I think it's already having a negative impact, seeing how the dollar index has done this year. Markets a lot of times, discount forward events. So in terms of what's happening this morning, spot gold is recovering well after the bashing on Friday after non-farm payroll. We're back to almost 1265 here. We're at 1264 as I speak. It's 12:15 London time or 7:15 Eastern Daylight Time. So gold's up $6.30. Spot silver $16.38, up 11 cents. So silver outperforming a little bit. The Dow surprisingly is down 7 points. Wow, it's 22,099. It's been higher. S&P is down 2.25 points. Let's see the currencies. The pound is basically unchanged, 130.25. Euro is a little stronger, 118.13, up about 18 pips. And the dollar is weaker against the yen, down 1/3% at 110.35. So yeah, that's the currency cross that helps gold. When the dollar goes down against the yen, it's usually positive for gold, or has been, in the recent past. It doesn't mean it's always going to be there. So dollar index, looking at it here, we're back from the top, the spike that we made on Friday, and I think we're going to resume, the move lower. Support right now is around 92.80. We're at 93.29. The high after non-farm was 93.77, and I think that's all it was, a counter trend rally in a market that's going to looks to continue to go down. Cryptocurrencies still doing very well. Bitcoin 3,400, Ethereum 280. So yeah, I don't know what to say. I do have a little bit of cryptocurrency, but I think people have to be very careful. It's getting a bit frothy. Feels like a bubble to me. I know Cliff High has been right about the price and everything, but and I feel that there's a lot of people out there that have given up on precious metals and are all in cryptocurrencies, and they might be right and I might be wrong, but I'm gonna stick to my guns and hold mostly physical precious metals. Cryptocurrency, I think, is highly speculative. It's fun. I guess some people have made a lot of money, but don't forget, if you make a lot of money in cryptocurrencies, you're going to have to exchange it for your national currency unless you don't want to spend that money. And if you keep it in the cryptocurrencies, there's a chance that it might crash or even, not disappear, but you won't be able to use it. A lot of times these exchanges, you go onto them and they say, that you can't deal in a certain cryptocurrency because they've got maintenance problems. So that's all I wanted to say. I mean, it still looks very good, cryptocurrencies. I still, got Steam. Steam's not, I guess, doing as well as Bitcoin, but it's around 140 right now. So it's rebounded quite well from the recent lows. Yeah, as I've said before, physical gold and silver, I think, nothing beats that. Even, gold money, Gold Money is a good company. James Turk, I've interviewed him in, before for my channel, YouTube channel, and he's a good guy. But I've got some gold with Bitcoin, Gold Money, not that much. I redeemed, part of it, and I have to say, the cost of redemption, the cost of shipping, and also I just got a call from the shipment company saying I needed to sign a customs declaration saying that the gold coin was an investment, gold coin. So there is a bit of hassle, when you've got it in your hand, you can just go to a dealer or a jeweler and you get the cash, So I'm not bashing gold money, but it's not, as, how can I say, convenient as having physical metal. So yeah, if you enjoyed this video, please like, share, subscribe if you haven't yet, and also follow me on steemit.com. And if you'd like to make a donation, I would appreciate it. I've got links below in the description. And I'll talk to you later. Bye.